Can I now sort of come back to the resource? So if I'm looking at page 17 of the recent PDAC PowerPoint, I believe that's the most recent one. You show the indicated and inferred numbers on there. I mean, you do use quite high numbers for the copper and the gold in relation to the spot price today. Are you getting sort of some sense of the economics? I know you say it's too early for a PEA, and it's too early to sort of say what precisely you've got here today. But what is the process that you're going through to make this attractive to mid caps or majors?
On these, it's a little bit of taking a look at volume versus grade on this and what are appropriate cutoffs for the material. So we use a 0.3 copper equivalent cutoff as our reporting line grade. But we'll notice in many of our presentations, we show the size of the deposit at different grade cutoffs. And some of the things that we're very encouraged about on this initial resource for us, it's our first resource that we put out on the deposit, is when we see that we have a cutoff grade and the reported grade is more than double what the cutoff grade is, that's a very good indicator that the project is quite robust. So in our case, we're using a 0.3 cutoff grade. In the indicated category, that results in a 0.48 copper grade, a 0.29 grams per ton gold grade, and about 7.5 grams of silver. So that's approximately a 0.7 copper equivalent. So applying a 0.3 cutoff grade results in a 0.7 resource reported on that. That's a good indicator that your resource has substantial zones of relatively high grade. And the reason that we use the metal prices that we used on for this stage is that's used to drive the pit. And so that's not necessarily the metal values that we'll use when we do a preliminary economic. It's common to see two sets of numbers on that. One is to drive the pit, and then once you have a pit, when we get to a PEA stage, we will most likely use values that are closer to current prices or even lower than those.
What permits do you have now, and what permits will you need as you sort of move forward?
We have a portion of a project that extends on to neighbors' ground, and those neighbors are a joint venture that operates the Tantahuatay mine. So the Tantahuatay mine is immediately next door. It's operated by a joint venture company called Comalaiche, and Comalaiche is a joint venture between Buenaventura and Southern Copper, which is Grupo Mexico's Peruvian sub, as well as a small third-party group in there. And they're mining the oxide cap over a very extensive copper gold sulfide deposit that is the same deposit that we're defining on our ground. So the neighbors have reported over 450 million tons of indicated resource at about 0.7 copper and 0.2 gold, and also a little over 480 million tons of inferred resource. So over 900 million tons of combined resource at relatively high grade, immediately adjacent to the mineralization that we've just announced. So the combined deposit is significantly larger than what we've shown on our ground alone.
Right, okay. So that whole area is heavily industrialized in a sense. There's going to be no issues around the sort of permitting component going forward.
That's one of the things we like about this is we're in essentially a brownfield situation, right, where we have an operating mine immediately next door. They're mining the oxide cap over a large copper gold sulfide deposit. They have about 6 years of mine life left, and they then have the opportunity to make the transition into the underlying copper gold sulfide mineralization. We have a portion of that deposit, so it really sets a nice timeline on the project to move forward. And what we've done is we've established agreements with the mine. They're best described as collaborative exploration agreements. If we each knew what we had, we'd probably be entering into a joint venture or some sort of a sales negotiation right now. But quite frankly, we each think we have the better part of the deposit. And better could be larger, higher grade, cleaner in our case, or closer to the surface. So until we each drill out our mineralization, we aren't really in a position to enter into negotiations. But the nice thing is that because that oxide mine is progressing and running out of ore in the not too distant future, we're highly motivated to move the project along quickly.
Okay, so I just needed to go down that line of questioning. There was some discussion, again, chat rooms and forums around block caving as a potential option for you if permitting was an issue. So I think you've knocked that on the head.
Well, really, it's logical to make an expansion of the existing pit, and the mineralization we have when we floated the pit, much of it reported quite easily to the pit on there. So it's a good indicator. It's quite robust, and it's very much in a geometry and an occurrence that's natural to exploit as an open pit on that. It's interesting to note that the pit that we floated had a strip ratio of less than 1 to 1. It was 0.85 strip ratio. So it's indicating that there's large volumes of mineralization close to the surface. However, some of the people in the chat room might be pointing out our more recently announced hole 26.
Okay.
And hole 26 was a hole that we drilled farthest to the north. It's the hole that we've been able to reach out as far to the north as possible on this. And we had the good fortune on the bottom of that hole to intercept 473 meters of 1.16% copper and 0.2 grams per ton gold.
Nice.
It's a breccia that's been healed by chalcopyrite and bornite. And that style of mineralization is currently completely outside of the resource that we've reported, partly because it's a hole by itself, so there's no support around it. It's also a little deeper. We anticipate as we drill that out that some of that will be captured by the open pit, but those grades also open the possibility of underground mining if that's a more viable operation, either in combination with an open pit or by itself.
So just quickly on your team, you've been together a while. You had a big success back 2010, 2011, was it? When was the
2010, late 2010.
2010? I mean, it was, well, tell people it was significant.
Okay. Well, when we set up as a company, really the company was founded by myself, Kevin Heather, who's our Chief Geologic Officer, and Mark Wayne, who's our CFO. And we were set up by some other gentlemen who were running companies and had the idea that copper prices might improve in South America. As we set up, we formed a company to do just what we did with AntaKori's and what we think we're all well on our pathway to doing with Regulus again, is carefully identify a project that has that potential to be large enough and economically robust enough that a major company would like to acquire it from us. That's based on decades of experience. Kevin and I have both lived and worked in South America for many decades, more probably than we care to admit on this. And we have access, we have language abilities, and we have familiarity with the ground. So we scour through our contacts and our knowledge of the area to identify these projects. They're hard to find, but once you find them, get on the right one, drill it out with good support from some of our major shareholders, and then ideally sell that. So with the AntaKori's, we had the good fortune to discover the Hikira deposit. Drilled that out over a number of years, completed a PEA on it. We're just at the point of deciding to move it to pre-feasibility, and First Quantum made a move on us and elected to acquire the project. So a project that we paid $15 million to acquire in stage payments, we ended up selling for about $650 million at the end of 2010 to First Quantum.
Right. Okay. So which is a great result for all concerned. I guess that's why you've got the following you have today. So just on that, you've got some cash, which will take you through to when? How long will that last?
We have a little over $10 million in the account right now. We're projecting 25,000 meters of drilling in calendar year 2019 on this, as well as additional metallurgical work and acquisition of surface. So we will need to do some type of a financing before the end of 2019. It's not immediately urgent, and we have some very exciting targets we'd like to test before we get to that point, but we will seek alternatives to do an additional financing sometime before the end of the year.
And would you expect that from the current institutional shareholders you have, or are you going to go to the retail market?
Well, it's kind of an interesting market for juniors like ourselves right now. It's increasingly difficult and uncommon to see more traditional private placements that we've all been accustomed to for quite some time on this. And almost all of the serious financing, the larger financings for groups like ourselves that have a good project, have really come with the benefit of a strategic partner. Many times recently, those have been mining companies that come in and support it to take a 9.9 or a 19.9 position. We have the benefit of having Route 1, our major shareholder, is kind of being our cornerstone investor on that. So we'll explore various combinations on that. Even though it's a difficult market, we have established large investors to support us, as well as a number of new friends that are curious about watching how we move the project along, and there are potential alliances that could emerge from those.
Right, and I think it's well known, well understood that the retail market is the thing which drives the share price, and clearly the better the liquidity, the better the volume on the retail, the cheaper the money is for you. Not necessarily, what your institutional partners want to hear, but that's, good for you, and should ultimately be good for them. So what are you doing to drive that understanding in the marketplace at the moment?
Well, as we move through stages in the projects, when you're really early on to make those early discovery holes, you see increased volume on that. Now we have a lot of shareholders who position themselves pretty well and are kind of happily to watch their positions. So we need to develop an additional wave of shareholders to come in. And we're doing that through increased interviews and increased marketing awareness to get the story out. Quite frankly, I think one of the main drivers that'll be for this is that if we see the copper price really take off on this, where I think I just came out of the CESCO meeting in Santiago, and there, like many other places, there's a strong anticipation that there'll be a demand supply gap in the not too distant future, and most likely a subsequent rise in copper. And I think everybody realizes that's on the way. It's driven by electrification of vehicles and a number of other increased uses of copper. At the same time, copper prices or copper production is declining. So I think everybody thinks it's happening, but everybody's a little bit nervous to jump in. And my experience on this is that when we see prices move on that, then there'll be a sudden turn, and we'll see more likely increased liquidity, increased interest in opportunities, just like we have.